All right, so we'll be doing this again, three types of analysis. I believe we've done it before, but let's just start from here today and see how far we can go. So what are the three types of analysis? We have the technical analysis, we have fundamental, and we also have sentimental analysis. Now, the technical analysis, so this is used by traders to study price movement. Traders study historical price movement in order to determine where price would go. It is used to study historical price movements in order to determine price, where price will go, tautology anyway. Technical analysis uses charts, indicator, and price pattern. Now, this is technical analysis. All right, technical analysis has to do with the chart, the history. What the chart is showing us basically is the history of what has happened in the past. Then looking at what has happened in the past, you can actually anticipate what is to happen next based on your understanding of price action. All right, based on your understanding of the price action. Because what each candle is doing is telling a story. So now you put them together and you interpret the story that will give you an idea of where the market is going technically. Okay, so this is just these images here. I will go to the chart and show you technical analysis. So this image representation here is the technical analysis. This is what you see on the chart. Now, this first chart is candlesticks. All right. Why the second chart is called line chart? Okay, because in the chart you can actually have candlesticks. You can also use line charts. All right. There are also other type, about 2 or 3 other types of charts that are used apart from candlesticks. The candlesticks is the basic ones because candlesticks is able to tell you a history, a story that you will interpret more better than every other chart that existed. Okay. So let me stop share here and share. Let me stop share and let me share screen. Let me share a chart. Okay. So this is the chart. All right. This is the chart. Now, when we talk about technical analysis, all right, over time, you begin to understand what these charts represents. Okay, so take for instance, now looking at this chart, this is daily time frame. You want to analyze this chart. Now, for me as a person, if I'm looking at this chart, first of all, this was trending up. Okay, so this was trending up, and it happens that price came here to do what we call double top. That's what we call double top. Okay, so price came to do a double top and break below the trend line. Now, it broke below the trend line and it also broke the neckline. All of these are grammar. You may not really understand them right now, but over time you begin to understand them. Now, this is a neckline. Okay. Now, there are patterns. We have chart patterns. So double top is a pattern. Okay. So double top is a sharp pattern. Now you have a double top like this, and it broke below the trend, broke the trend line, and also break the neckline. And immediately after breaking the neckline, there was also a retest. So let me expand it for you to see. Okay. Let me expand the chart for you to see. Okay. So this was the candle that broke this first candle broke the trend. All right. Then here, this candle now broke the neckline. Okay. Breaking this neckline, there was now a retest here. After this retest, there's a rejection. Then you saw this candle, bullish candle from the rejection. This is to tell you that this trade is going down. Ordinarily, yes, you will say, what happened from here? Why didn't you enter from all the way from here? Yes, your pattern of trading determines, so you can actually must have entered this trade from here before it came to this level. But meeting this trade at this level is a total confirmation of a change of trend, a total confirmation of a change of trend. So what happened in this case, after this break and retest, then this becomes the next bear candle. So now you want to take this kind of trade, you may go down to do want to do analysis to enter from bottom. But if you are a swing trader, or maybe you don't want to do all of that, you just put your stop loss above the previous high, which is the neckline. And depending on the kind of trader you are, you can say, okay, let's do 1 to 2 risks to reward. So this is 1 to 2, 1 to 2, okay? Now this 1 to 2 was actually delivered. This 1 to 2 was delivered. So you enter this trade here, and this 1 to 2 is giving us how many pips? It's giving us 152 pips. Okay, this is Euro USD. It's giving us 162 pips in how many days? So let's assume you enter this trade here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 days. All right. Now, how many of us are patient enough to wait for 10 days? Okay. But this is how analysis, when we talk about technical analysis, this is just basic technical analysis I have shown you. All right. Now, another thing happened. After this, your trade hit TP, it went up again to this level and came down with a very long bearish engulfing from that level. That's to tell you that this trade still went further down. So let's say if you are a swing trader or a position trader and you see this kind of trade, all right, you can actually hold this trade for, there are people who hold trade for 1 month. There are people who hold trades for 6 months. So if you are that type, now someone who is holding this trade for how many days? Okay, so this was 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. So this trade hits TP in 25 days. Now, these 25 days did 430 pips. So 430 pips, if you are someone who is trading with standard lot size, okay? If you are trading with standard lot size, 430 pips, as a swing trader now, 430 pips, that would be enough for some people. That is just enough for them for the month. 430 pips times 10. That's $4,300. $4,300, all right, for the month. There are people who, that is how they trade, and that one is just okay for them. That one is just okay for them, all right? So this is, I just want to show you what technical analysis is. So now let's go back to let me stop share here now. Now let's go back to the presentation slide. Okay, so now I've shown you technical analysis. Now the next one is fundamental. Now fundamental said this includes political, social, and economic news used to gauge how the markets will do along with a country's potential economic outlook. The performance of a country affects the outcome of the currency of that country. Now, indicator for fundamentals analysis. Now, fundamental analysis. Now, let's take politics, for instance. Take politics, for instance. Now, political, what happened around politics of a country actually affects the economy and in turn affects the currency. Either way, either negative or positive. The same way we have a natural disaster, all right? Natural disaster, those are things that affects the economy, okay? But in terms of, and those ones are under fundamentals. So let's assume you just hear that, oh, maybe there is a bomb. There's a bomb blast in, just like when it happened in Twin Tower, you know, that bomb blast definitely affected the economy of the United States. That time, the currency will go down. The strength of the currency will go down. So all of those things, you put them into consideration when taking a trade that is paired with that currency. All right. So some of the indicators for fundamentals analysis are, that's the things you look at, the tools you use. You share Bloomberg TV, all right, Forex Factory, currency strength indicator, and various economic calendar. There's a lot of them. Like this Forex Factory now is the one we use most, all right? For me as an individual, I use it so much. There are people who are glued to TV like Bloomberg and the rest just to get for fundamentals, news on what is happening. Okay, there are people who are glued to want to listen to what is happening around Israel and the war around them, to also make decision around how to trade. So all of those things are outlook and outcome, outlook rather, that you need to look out for to make a decision. So now that's for fundamental. So now let's go to sentimental. What is sentimental? Sentimental is actually an outcome of fundamentals and how the people behaves. Okay. Okay, let's see it here. So this is the overall feeling of the market. It emphasizes on how people respond to the news and how that shows up in the market. Example, people's response to the US election and how that will affect the market. It basically is people's feeling about the market. So let's assume after the US election now, some persons are tilting to say, wow, now that Trump has won, at least the strength of the USD will be a good one, all right? Others are saying, but at the end of the day, you see that more persons are on the side of the positive side. So that is sentimental, all right? Sentimental. So sentimentally, the USD is strong. It's going to be strong. So now you are looking at all of these factors to make your decision in whether you want to buy or you want to sell. So this is actually the simple explanation to sentimental analysis. How the people feels about the outcome of an economy, you know. So the feeling will determine where people will tilt to. Are they tilting to buy or they are tilting to sell? Now, when you look at it, more persons will be tilting to sell, while few persons are tilting to a buy. Then some persons are neutral. All of these, their data, their analysis, to look at them and you put all of them together, make the decision before you take a trade. Okay, so right now we'll be doing confirmation checklist, but before then, let me just let me stop this video before that of confirmation.